Welcome, everyone. My name is Scott McCollister. I'm part of the investor relations teams at Wacker Chemie. I'm happy to take you through the first quarter results today. We reported a very strong first quarter. Sales were 2.1 billion euros, up 53% year over year. Higher prices in chemicals and polysilicon were the primary driver. In addition, volume growth and mix improvement in chemicals supported our performance as well. EBITDA more than doubled to 644 million euros. Polysilicon stayed tight and benefited from higher prices. Both silicones and polymers saw strong demand and delivered both year over year and consecutive growth. Both divisions benefited from higher prices. Although our results are clearly ahead of plan, the risks for the remainder of the year are much higher today. On the input side, we now expect material and energy costs to be 100 million euros higher than our initial estimate. To counter these cost headwinds, we have been actively raising prices in chemicals. Our pricing initiatives have been fast and very effective. With the publication of our Q1 result, we raise our full year sales forecast to 7.5 billion euros. We reconfirm our group full year EBITDA to be in the range of 1.2 to 1.5 billion euros, while we see the result trending clearly towards the upper end of the range. At our CMD in March, we introduced new 2030 targets. Our key message is that we will strive to accelerate proven successes while maintaining resilience. Now, to recap shortly on the main messages from the CMD. We completed the leverage phase, where we promised to invest below depreciation, earn attractive margins, and focus on cash generation. In silicones, we have transformed ourselves to be the fully integrated specialty player in the market. In polymers, we advanced the transformation to smart construction. In BioSolutions, we set the foundation for a leading microbial and advanced medicines CDMO. In polysilicon, we have become the key supplier to the semiconductor industry. In short, we have done our homework. We will accelerate growth in chemicals. The key growth drivers are sustainability, customer interaction, as well as regional growth. We introduced 2030 targets. These targets are ambitious. We have demonstrated in the past and today that we can perform at this level, and we will continue to do so. Here, we break down our long-term targets into shorter range targets until 2026. These are our key initiatives: our scheduled CapEx to achieve these targets, and ROCE targets, which are at the top range of our industry. To meet our customers' growing demand, we need to invest more than in the past in chemicals. We will increase CapEx in chemicals to more than 400 million euros per year. This will help create an even more resilient portfolio. Maintaining resilience is key to us. Our teams pursue sourcing and pricing strategies to protect our margins. We keep working on our cost base, both structurally and from an efficiency perspective. Our foundation for resilient growth is our very strong balance sheet, which I will recap later in the presentation. Now, looking to our capital allocation priorities. Our number one priority is growth. We will accelerate capacity growth, focusing on downstream with balanced upstream to support specialties growth. We are talking about a portfolio of many mid-sized projects and no major greenfield investments. Our number two priority is shareholder returns. We are a shareholder-oriented company and aim to pay out half of our net income to shareholders. In line with this policy, we will propose an €8 per share dividend at the upcoming AGM. Our number three priority is pension reform. Things here are underway, and you will hear more from us later as we make progress. Here we summarize our CMD targets. We will grow through volume and mix at almost twice our historic growth rate. We will earn 2 times our pre-tax cost of capital. We will earn EBITDA margins above 20%. We will reduce our CO2 footprint by 50% by 2030. Going forward, you should expect faster growth, bolder moves, and higher profitability while maintaining resilience. Now looking to the first quarter results. Group sales increased by 53% year over year. The dominating factor here was pricing with 43%. Volume and mix contributed 6% to sales growth as well. Gross profit more than doubled to about 670 million euros, despite raw material and energy headwinds of more than 250 million euros in the first quarter alone. EBITDA was 644 million euros, following price increases, positive mix effects, and trailing raw material costs. Earnings per share amounted to 7.92 euros per share. Now looking to the balance sheet. You see here an improved balance sheet. Equity increases by over 800 million euros on earnings and lower pension deficit. The equity ratio climbed to 46%. We also saw rather big changes in the pensions. Our pension liabilities decreased by over 450 million euros to 1.4 billion, following higher discount rates in Germany. Silicones achieved an outstanding quarter. We saw very strong demand across all sectors. Sales came in 50% higher than last year. The EBITDA margin exceeded 30%, benefiting from price, volume mix, and significant trailing raw material costs. Strong demand will support our business for the full year. However, we do not expect to maintain first quarter margins for the full year. Escalating raw material and energy costs will catch up to us. For the full year, we now see sales higher than before at 3.3 billion euros, with margins on a par with last year. Polymers saw continued strong demand. Sales climbed by approximately 50% year over year. EBITDA climbed by approximately 90% year over year. Strong pricing initiatives addressed higher raw materials, energy, and logistics costs. Looking to the rest of the year, we now see sales higher than before at 2.1 billion euros, with margins at last year's level. BioSolutions recorded 14% sales growth, with bioingredients especially contributing. EBITDA was held back by a force majeure and integration costs. During the quarter, the German government awarded Wacker and Corden Pharma as part of their pandemic preparedness plan. This testifies to our abilities and helps us to increase our capacities for mRNA medicines. For the full year, our forecast is unchanged. Sales in polysilicon climbed by nearly 80% on the back of sequentially higher prices. We continue to see very strong demand for solar and semi-grade polysilicon. EBITDA was 225 million euros, despite substantially higher energy and silicone metal costs. For the full year, we increased our sales target in polysilicon. We now see sales higher than before at about 1.8 billion euros, with an EBITDA trending towards the upper end of the range of 330 to 500 million euros. As said before, we see much higher energy and silicone metal costs holding performance back this year. We ended the first quarter with a net financial result of 521 million euros. With strong cash flow generation, we were able to fully fund not only investments, but also the SICO transaction, which we announced last year. We expect to close the transaction soon and consolidate the business in the second quarter. SICO will be immediately earnings accretive and expands our specialty portfolio in the Chinese market, which is strategically important for us. Looking to our group guidance for 2022, we now expect sales of approximately 7.5 billion euros, with an EBITDA trending towards the upper end of the range from 1.2 to 1.5 billion euros. Our businesses have seen a strong start to the second quarter. However, headwinds from energy and raw materials keep mounting. Trailing raw material costs, which benefited silicones and polysilicon in the first quarter, are waning. The underlying trends in our businesses remain intact. The other items are unchanged. We will look at our full year forecast again towards the end of the second quarter when visibility is hopefully better than today. Thank you very much for your interest in Wacker Chemie. Should you have other questions, please reach out to me or York at any time. We're happy to field your questions then. Thank you very much and enjoy your day.
Since you watched this company video until the end, I'm guessing you liked the video. That's probably because we work very hard to create the most engaging and value-added content possible for you. If you're a stock-listed company or corporation and want to find out how we at C11A can make a company video with and about you, please email us at community@c11a.com.